the most eminent speakers and panelists around the world. I welcome today Dr. Ritesh and Mr. Vineet Rai as panelists for this session. Let me give a brief about our experts. A very warm welcome to Mr. Vineet Rai. Thank you so much for your time today.
Thank you for having me.
So as we all know, this name is known to most of us, and it's the one icon in the impact investment community around the world. So Vinitra is the founder and chairman of Avishkar Group, an impact investment platform impacting millions of people in Asia and Africa using an entrepreneurship-based development approach. Vinit has received numerous awards, including the TIE Hall of Fame 2018, the Impact Investor of the Year by New Corp of 2016, Porter Prize for Strategic Leadership in Social Space, Award for being the Catalyst Fund for India 2006, Lemelson Award for Social Venture Investing. Vinit also serves as a commissioner at the Business Commission for Sustainable Development, as a senior advisor to Blended Finance Working Group at OECD, and as an advisor to United Nations Economic and Social Commission for Asia and the Pacific Science, Technology and Innovation Advisory Board. Recently, Vinitra and Swati Rai, co-founder, was awarded the Faces of the Vibrant Bharat 2021 by Grant Thornton Park. So very warm welcome to you, sir. Now I take this opportunity to welcome Dr. Ritesh Chen. Thank you for your time today. Dr. Ritesh Chen is a co-founder at Infinite, London, Humanizing Credit and Credit Cards. He's a former COO and at HSBC. He's an entrepreneurial technology leader and board advisor with global experience across various sectors, including payments and banking. He led the future of payments for Visa and introduced Apple Pay, built a wealth management company as a founder CTO. Presently, he's a member of a G20 initiative for financial inclusion, advisor to open banking in Europe and Africa, Harvard Business Review, payment regulators and government bodies for the initiative in social and financial inclusion. Past roles also include the mentor to the UK Parliament, digital service and startups. A very warm welcome to you.
Thank you, Anamika, and pleasure to be here, and thanks for inviting me.
I also take this opportunity to welcome our CEO, SIIC First, and C3 I have Dr. Nikhil Agarwal. He will be moderating the session today. Thank you so much,
Thanks a lot.
Dr. Nikhil. And over to you.
Namika. Thank you.
Over to you.
Welcome. I would not say warm welcome, because in India we like cold welcome. Not just because of the there is less of intensity, but it is just the weather. It don't allow us to be warm. Jokes apart, certainly it's a fascinating time for startups. Practically every other day we are hearing the significant investments done by companies. And I was reading an article recently. There are more number of investors today than the startups, and the investors are having the FOMO rather than startups were having a FOMO, which is good news for startups and innovators. I would say whatever the COVID has done some wonderful things, that scientists have got some the place in the sun. There is doctors who are come in the front, and startups have started being recognized as the mainstream player, not just a sidekick player. We have seen the IPO of Zomato. We are looking forward the IPOs of Policy Bazaar, Paisa Bazaar, Paytm. Some finest startups are filing to the SEBI. So all these things is happening at that excitement level. The base of this is financial technologies and the work that has been done. Today we have two most prominent specialists with us. As Anamika has said, Vineet Rai. Vineet is the pioneer for startup investment, impact investment in the country. The Ritesh is not Ritesh. You are still in London or you are back in India?
No, I'm still in London.
Okay, Ritesh, based out of London. Incidentally, we share some common things. We sit together at the Word Business Angel Investment Forum. Ritesh is also a pioneer in financial technology. Some of the work he has done as a CEO HSBC was prominent. We would like to hear more about your work, what is happening in coming days. And uh, uh, first, I would go to Ritesh and ask this question that uh, can you brief us about the work that you have done in HSBC and what prompted you to your current role and what fascinating things you are doing in your current role?
Sure. Thanks, Nikhil. So I come from the banking and payments landscape, and I led the future of payments for Visa in the past. So those were the days when we used to process millions of transactions. Now we can say we process billions of transactions in a day. And especially the contactless, the mobile payment has changed the face of the fintech and the financial industry overall. So I come from that background. I've been brought into HSBC to build the bank of the future. So my focus was mainly around building a foundation for the bank of the future, migrating from monolithic platforms to the forward-looking or emerging tech, as well as building an ecosystem where we can grow as a bank. We can build the right partnerships because as a large incumbent banks, you can't do everything by yourself. So you need to rely on to the ecosystem. And that's where my focus was. What I realized over the period of time, there are certain problems which banks or the financial services company will not solve for obvious reason, because these problems forms a good hefty portion of their balance sheets. So one such problem I was eyeing for a long time. I knew that there is a problem, and that is specifically related to the credit space. So in Western world, especially, there's a huge disparity in the interest rates for various products, from your personal loan to credit cards to the payday loans. And it's a matter of laugh when I say the payday loan goes anywhere up to 1500% APR. When we say that in India, it's a matter of laugh, but that's true. And that's a reality in the Western world. So what I realized that we have got a systematic problem in the Western world. So credit cards are great product. They offer significant flexibility and the coverage. But at the same time, we push people into the debt cycle. So I wanted to solve this problem and fill this gap. And that's why I came out of the bank. And with my previous mentees, I've co-founded a company, Infinite, to humanize credit and credit card experience into UK and European market. And that's what I'm doing at this point of time. Along with, I'm advising and associated with incubators, as well as incubators, accelerators, and financial institutions.
Fantastic. So you mentioned about something. I'll come back to you regarding the future of the banking. I still remember vividly 1995, one of my earlier gurus in financial technology, now in Goldman, and he told me in 1998 that he works on e-banking security. And at that time, we have not even heard of e-banking in the country. And then he told me in 1994, there was a first completely online bank which was registered in the United States. So certainly the future of e-banking is not what we see today. It was started 20, 30 years back. I will come back to you regarding what do you see as the future of e-banking. Now let me go to Vineet. Vineet has been a pioneer in impact banking and impact investment for long. So my question to you, Vineet, is that what 20 years back, at that time, the concept of impact investments was not even existing. The venture capitalist industry was, you can count people on fingers. What prompted in moving from the core investment banking, treasury kind of investments to impact social investments?
Thank you, Nikhil. I was actually in the forest. I'm a forester by training, so I was hanging on trees. So therefore, I did not know anything about investing, and because I did not know anything about investing, it was easy to do stupid things. My history was simple. I'm a forester. Was in the forest, got married. Wife didn't find the forest enchanting. Went to IIM Ahmedabad to do a bit of research. Didn't like it. Government of Gujarat was setting up India's first incubator. I applied for a post of manager, became the CEO, ran it for 4 years. And during those period of time, my job was to convert ideas of farmers into businesses. So this was an incubation of farmer ideas. So I was picking up these very crude ideas, brilliant ideas, crudely executed, and converting them into real businesses. And in the process, I realized that, hey, there is an opportunity to change the way world is run. So generally, money and talent moves from village to cities and from cities to international zones. I wanted to take both capital and talent back to rural India so that you can create jobs where people live. And with this very bright idea, I was 29, going to 30. When you are 29 and 30, you are naive, you are inexperienced, you don't really know what you can't do. And because I did not know, and on top of that, I was a forester, allowed me to actually quit my government job. And with 5,000 rupees of personal capital, I started Avishkar. Of course, the term impact investing did not exist, so I did not know what I was doing. What I was trying to do was invest in business ideas that would create jobs and livelihoods where people live, so rural India. And as is possible for a lot of entrepreneurs who are listening to me, when you are brave, naive, and slightly hot in your head, you take decisions and then you pay the cost for it. It was a fairly tough journey for me. Next 5 years, I went from my 5,000 to 5 crores, reflected and realized I was too obsessed with poor and talent, etc. And my job is actually to find entrepreneurs who are building disruptive businesses around complex problems. And so instead of focusing on the poor, I should focus on the entrepreneur and their business models and the disruption that they can cause. Now, finance is a big area. As you know, a large percentage of the population, poor population, is excluded from finance. So right in front of my eyes, the microfinance experiment was unfolding. And so I started investing in microfinance. Just to give you a context, in 2005, and between 2001 and 5, total India's microfinance asset was 150 crores. Everybody put together was 150 crores. It's 3 lakh crores now. So I have been part of the journey from 150 crores to 3 lakh crores. And then while I was doing finance, I also actually saw agriculture as a great employer. And again, noticed the same thing. Very large sector, very open for disruption, absolutely no use of technology. There was no talent coming in. And so the moment you see talent and technology participating to disrupt a complex social problem, you can see dollar, rupee, or whatever wealth you look at. Because whenever such disruptions take place, the size and scale of the opportunity is beyond anybody's imagination. And so like I took you from the journey of 150 crores to 3 lakh crores, I think agriculture is in the same suite right now. I started investing in 2007. But if you go out and ask people about where the biggest amount of dollars are going right now in India, you will hear post FinTech and financial services, agri-tech and edtech. And of course, education is also actually attracting significant amount of capital. But really, all these are big problems. And when an entrepreneur identifies a large problem, uses talent and technology to disrupt them, that's where investors go. And that's really the simple mantra of making a lot of money and attracting a lot of capital. That's what we need does.
Great. So I still remember that I was reading one book by Vikram Akula, quite interesting book, that what happened during his life journey, how he started the SKS Microfinance.
Fistful of Rice. I don't know which one you were reading. There are 2 books. First one is Fistful of Rice.
Yeah. The first one was quite, it has given great insights about what happened in entrepreneur's life, that you keep on coming back to the same company. I think it was our same reflection of Steve Jobs' life, that he left the Apple and then came back. So certainly a follow-up question to you, Vineet, is maybe it will be useful to describe how do you differentiate impact investment, the regular investment. That is one. Because that's quite a, I would say, fluid space. blurry space for most of the people. People think that doing an NGO work is an impact investment, and how do you substantiate profits, and how do you provide a shareholder value, which is the most important thing for the investor. And second follow-up question is regarding that, how do you evaluate that a particular entrepreneur is creating an impact? Is there a kind of metrics that exist or a method that exists? How do, for example, in common terms, people say, okay, what is my multiple? How much X I will get it? So in impact investment, how do you calculate those things?
So I think beauty is in the eye of the beholder, Nikhil. So impact is like beauty. You can see it, sense it, sometimes measure it. But then again, it's a complex theory. But let me actually start by the simple question. What is investing, and does investing make impact? Let's start from there and then come to impact investing. So it's a simple thing. Any investments you make will have an impact, because impact is an outcome. So and since you guys are sitting in IIT Kanpur, you understand physics very well. Every action has an equal and opposite reaction. So every investment will have an outcome. So when you put in money into something, something will come out. Now that coming out could actually is return. So I put in 1, I got 3 back. But it also creates jobs, livelihoods. It also creates pollution. It creates negativity. It creates exploitation. So basically, every investment has a positive outcome and a negative outcome. Some may have purely positive outcome. Some may have a positive and negative outcome. And some, like for example, if you're in arms industry, you are only destructive generally. So you will create some very small amount of jobs, but you will create a lot of destruction. So an investment can deliver impact, and investments like, for example, telecom. Now, telecom has delivered more impact than Vineet Rai can ever, or 1,000 Vineet Rais can ever deliver. Now, the impact that has come out from there is an unintended consequence of what people wanted, because communication was important, innovation took place. So great stories around generic investments making massive impact. Now, the question came is, why did impact investing needed? The world has 7 billion people. Roughly 1 billion people is what every innovation in the world is designed for, the 1 billion at the top, less than 1 billion. So what happens to the remaining 6 billion? Well, the remaining 6 billion try to structure themselves to live with with what has been done for the top 1 billion. Impact investing is essentially doing following. It is essentially challenging the $400 trillion of global capital to consider the remaining humanity as human beings and start thinking about building businesses for them as well. Now, this is in a very simplistic manner. What you are trying to do is, all investments right now are for the top 1 billion. We are trying to actually increase the quantum and focus of the people who are involved when you are designing your business. And so impact investing essentially is trying to convince mainstream capital to come and play a role in the lives of those who are not really part of the classical mainstream. How do you do that? So I'll actually so I talked about $400 trillion, that's the global capital. Then there is a small amount of global philanthropic capital, that's $300 billion. So it's 1% of what you have, less than 1% actually. Now this $300 billion is the global philanthropic pool that goes to not-for-profits, that goes to feed a hungry child. Now there is no business model that can directly feed a hungry child. So you have to follow philanthropic activities to do that. So we are also trying to insulate money, the $300 billion, so that it can go only for philanthropy, so that we can bring for anything that falls into a domain of impact, which can actually has a business model where you can make an investment. You want them to focus on investing activity and not let the philanthropic dollar that can feed a hungry child to actually walk away from there. So that's the second aspect of impact investing. Now, impact investing is a continuum. You can actually help 100 people actually to set up a small farming unit in a village, provide some capital there and keep them alive. So these people can roll this capital over and just stay there. You get no money back. So that could also be impact investing. And then there is what is majority of impact investing, where people like me stand, where we believe that I can have my cake and eat it too, which is very complex. You have made your investment, you have given your money to an entrepreneur, but you are specifically asking this question when you're giving the money: can the entrepreneur disrupt a complex social problem by using the capital that I have provided, using technology or a brilliant idea? And in doing so, does he have a business model? That means he or she can generate wealth or money. Now, this is the question we ask. And if we find somebody who can do that, then it does not matter whether he gives me 3x or 30x. We are then focused only on the commercial side of it. And I can later in the course, when you will ask me, I can give you some examples to explain how these disruptions take place. Microfinance was a great example of a disruption. But there are hundreds of such disruptions taking place right now, because as I said, the base of the pyramid is very large.
Greatly explained, and certainly that statistics is quite new to me. $400 trillion and only $300 billion is available for philanthropy. I was assuming is much more. So certainly we are creating more billionaires every week, but I think that money is not flowing back to philanthropy. Coming to Ritesh, you speak about the banking, payments, fintech, and everything in fintech. What we have seen revolves around payments. Somehow the fintech is not going beyond payments. So maybe you can share your views about the fintech, and then since you have worked in multiple countries and you have understanding of India compliance as well as the British compliance, if you can share that, what are the compliance issues that is coming to the fintech industry? What are the bottlenecks that are being faced, and how we can overcome these bottlenecks?
Sure. So thanks, Nikhil. And thanks, Vinit, for enlightening us with the impact investment. And that's one angst, I would say, or the pain that everybody, when we talk about the startups or when we talk about the growth, everybody look at from one lens, and that is the returns. I understand we are in a capitalist world. We are looking for the return on investment. We are seeing a growth, tremendous growth in India, but everybody talks about the growth in the financial services, the fintechs, right? Or the service sector. But let's focus. India has got a tremendous potential and opportunity, right? From all aspects. We are phenomenal in terms of the size. We are phenomenal in terms of the agricultural landscape, as well as the growth perspective. When we talk about the financial services and fintech, now I'll come back to the basic question. Yes, everybody talks about the payments. The reason is, it is a lot easier when we go back. The history of payments goes to centuries, right? We are using payments in the one or other form. Especially in last 3 to 5 decades, the payment has changed its mode significantly, especially in last one and a half decade. Now, what we have just heard earlier as well, some of the things which have come earlier in the market, but they haven't been realized, the potential of them haven't been realized because they were too early. For an example, if I say, we talk about Apple Pay, we talk about contactless payments, we talk about the digital payments, but contactless payments started by American Express. They brought in as a private payments in early 2000, or even well before that, or in 90s. But it was too early in the market, and people didn't realize that. Today, there's quite a lot of focus on the buy now, pay later. Everybody talks about the buy now, pay later, but it is nothing new. We have been talking about this in the global landscape, in the regional markets for decades, and we have been seeing that, right? But it wasn't organized. So yes, everything evolves and revolves around payment in the fintech and the banking landscape, because ultimately it's a transaction which took place, and the transaction which is basically transacting the money from one end to the another end, right? So the payments becomes the fundamental of all the aspects, whether you talk about the wealth, whether you talk about asset management, whether you talk about the banking, insurance, or anything, microfinance for that matter. For microfinance to become successful, you need an infrastructure. You need a payment infrastructure. Otherwise, you are seeing quite a lot of challenges. What happened in India, the growth that we are seeing into the financial sector or the fintech, it is because of certain initiatives that government has taken early on, like the unique identity is one thing. The UPI has opened up the landscape for the financial institutions as well as the businesses to partner. So if you talk about all the innovation that you're seeing in the fintech landscape in India, the majority of the stake goes to, and thanks to the UPI, which has become a story for the global market. So I can tell you, I've taken that reference of UPI and we are building up something in the Nordics market and that initiative called P27. So India is teaching the world that how payments can work, right? So everything, yes, everything evolves and revolves around payment. Unfortunately, the payment landscape have been living onto the monolithic platforms and the or the legacy platforms. So even if you talk about today, the large payment companies or the credit card companies or the banking and financial services, that's where the biggest challenge is. We don't have an interoperable system. So yes, the UPI is there at the moment in India, great, but at the same time, there are a lot of other challenges which we need to address from the interoperability perspective in the global landscape, not only in the Indian market, but the global landscape. Now, the second part of the question you have is around the regulatory challenges. So India has grown up significantly, as Vineet has explained, from 150 crore to 3 lakhs crore in the microfinance. Great. But at the same time, are we really mature enough from the regulatory perspective in comparison to as the Western markets? Now, there are two ways to look into it. Your more regulation can hinder your growth and the innovation or the disruption. But at the same time, when you're growing up, you got to have a regulatory and the compliances in place, the belt and brushes in place, so that you can control them. Say for systematic risk, do we have really the prudential regulatory sort of compliances in place in India? I do not think that. So yes, we need more regulatory and the compliances to avoid the systematic risk over the period of time. We have seen umpteen failures in the examples in the banking and financial services industry in India. And the rationale was because we do not have enough compliances in place. But we got to worry about whether we want to hinder or fuel the growth of the fintechs or the ecosystem when we are building up these regulatory and compliances. On the other note, before I wrap this up, India is a great place to start something. So when you not only in the Indian market, not only the Indians, but you must be seeing quite a lot of transition. The global companies are eyeing India. They are migrating towards India. They are building up their base in India for obvious reason, because the tremendous potential, workforce, talent, and the size of the economy. So outside China, one of the biggest market is India. China has got its own challenges in terms of if you would like to start something. At the same time, India is much more open in terms of the regulatory and compliances as well. If you would like to start a fintech over here in a European market or UK market, you must be struggling with the regulatory and the compliances for a year or 2 years before you can really bring your product into the market. India is working on that, and thanks to RBI or the various regulatories, insurance regulatories as well as the payments regulatory, they have come up with the sandboxes. They are maturing, but it is still, they need to work up on the regulatory and compliances in a bit more focused manner to avoid the systematic risk. Thank you, Nikhil.
You made a very valid point that some of the technologies and ideas that is originating from the developing market. And two such examples comes to my mind. M-Pesa from Kenya. Who have thought that Kenyans and Africans would start doing the sort of the grandfather of mobile payments using the M-Pesa and sending text messages. You know, that's what like Bhish Pitama of the payment. Similarly, microfinance. Who have thought that the poor people in Bangladesh will get started this as a microfinance become in the industry itself. So certainly in India, of course, UPI you mentioned about it. Number of other things that India has done quite well. Something which we have seen during the financial crisis time, sometimes we can always claim that we are over-regulated place. Same thing the British says that we are over-regulated place, but regulation is quite important as far as the banks are concerned. One of the things which I would like to see personally for a startup particularly, I would like to see ease in regulation and raising the investment from outside. And I have seen many of my startups struggle even to get $10,000 when they have to get it from outside. They have to get into the KYC for weeks and weeks and months and months. It is not the easiest space. Within India, things have dramatically improved, but when it goes to the country-to-country transactions and investment, it is creating a lot of challenges. I'll come back to this with this particular question, that how we can ease the investment on a cross-border level, particularly for the smaller startup, because startups, they can hire a big law firm, they can pay 100,000 as a fees and they can all sort it out. But for a smaller startup who is raising $20,000-$30,000 to do a POC, it becomes quite a challenge for them. Now, coming to Vineet, before we go to the startup raising the payments from abroad, how do you, my question, I'm just doing the follow-up question from the last, my bit, that how do you evaluate a company? And I believe that you are do both the regular investment and the impact investment as a part of your investment strategy. You may be investing as an individual as well as your Avishkar investment, which you do. So how do you do that? How do you measure that? What's your investment philosophy per se? And given that so much is happening and every other idea is a great idea, a fascinating idea, how do you resist yourself?
So Nikhil, I've been investing for 22 years. So we don't get excited because we have seen enough failures. We also understand that for every 99 failures, there is probably a brilliant idea. So I'll just give you some statistics so that you understand how we go about it. So first and foremost is every investor has to have a thesis. So as an investor, we actually come up with a thesis. We make our own predictions of where the world will be. Generally, if I'm investing today, I'll be exiting 8 years down the line. Now, 2020 of India is going to be very different from 2028 of India. Given the dynamism that you see in the market, it is going to be incredibly difficult for anybody to predict with great sincerity what will happen in 2028. So if I invest in a company that is at the peak of its excitement, then I'm going to pay through my nose to get into that company. And it is actually at the bottom of its enthusiasm when I'm exiting, you can understand what my returns will be. So what we have to predict is, and this is very difficult. That's why investing is a very difficult task. You have to predict the future and then identify the potential opportunities where you will put your capital in. And that's why thesis is very important. Investing thesis is very critical and important for any investor. Once you have identified your thesis, then you actually go back and ask yourself, are you pray and spray investor? And a pray and spray investor is not really just throwing your capital around, but a pray and spray investing is where you actually come up with a very well thought through theory that you will invest in every trespasser. You will largely meet a lot of people, and those whom you see promise, you will simply invest in them. And then you will watch these guys and keep investing in those who are doing better and better. Generally, to do that, you have to be a pure tech investor. So you are actually discovering technology discovery or human behavior change if you're trying to actually do those things. And you are then trying to put small amounts of capital to a lot of people. And then selectively improving your chances of success by following through the same guy as you succeed. And that's actually one style. There is another style is what we call concentrated investing, but at an early stage. Avishkar has followed a very reverse theory in that sense. And that's why we are very different from Silicon Valley investors, even India's tech investor. Avishkar never does more than 10, 12 investments. Even if we are doing zero revenue investments, we continue to do less number of investments, but we are a concentrated investor and we generally give larger amount of capital, even at an early stage. And why do we do that? We are actually looking for real problems. So I'm not looking to invest in the next dating app. I'm actually looking to invest into the next guy who can come up with an idea, who can convert waste into wealth. Now, this is a real problem. You have an unlimited supply of waste. Any guy who can figure out how to convert waste into wealth is going to be a billionaire irrespective. And the risk of that guy failing is much lower compared to a guy trying to come up with another dating platform. Because there are already Bumble, Twitter, Tinder, whatever, so many of them are there. So I am not going to go into it. I'm actually looking for somebody who's solving a real problem. and building a billion-dollar enterprise. Now, this is really where we differ in our approach. Technology plays a very big role because you are actually essentially trying to use technology in every aspect, and technology will allow them to do things differently and create wealth and value. So when I actually look at an entrepreneur, I'm actually looking at an entrepreneur and finding out, has the entrepreneur found a problem that nobody else has been able to solve? Is there a problem? Now, even in FinTech, as you have all kinds of each other's clone FinTech coming through, this question is coming again. What kind of a FinTech are you? Are you solving a problem that everybody else is solving? Or are you incrementally better? Or have you found a new problem that you're solving, that you are the only one player in the market? And I think value and wealth is created when you find a unique problem and you have a unique approach to solving that problem. Capital will queue up to sign and invest into you. But if you are just another guy with another idea with no real differentiation, then you have to really fight the war. And your ability to execute will make you the differentiator. However, in that case, you are competing against 100, and it is going to be a very big war for you to succeed. Your ability to create wealth and value, therefore, will be in the same proportion going to be much lower as well. So any of those who are listening on the other side, if you are entrepreneurs and you want to become really rich entrepreneurs, you have to come up with you have to identify a problem that you solve first, solve fast, and do it in a manner that nobody else can. Then you will create a lot of wealth and value. If you are into a Me Too market of differentiation, where your execution capability is very unique and different, then you are in a very rigorous market. You will be challenged all your life. But you may still be a reasonably successful guy. Either kind of entrepreneur will be successful, but as investors, our job is to identify those who are doing unique business problems. And I'll come back to that question that you'd asked me earlier. So how do you look at impact as a return? Once we have found out that the guy is converting waste into wealth, impact is, the multiple of impact is immaterial to me. Because if waste is becoming wealth, the more this guy makes wealth, the more waste he has cleared. And therefore, it's a very logical conclusion that he has made bigger impact.
Great. So certainly I absolutely agree with you that how the excitement is built up in the and that was interesting to see. Both is a Vodafone idea. One company is losing 300-400 crores a year. Another company has a revenue of 50,000 crores, close to 27 crores customer. But still, the share value of one company as a newbie in the block is 150 rupees, and another company which is practically going bankrupt. So it's fascinating to see in a monopolistic market that how you can go bankrupt. We have seen in the case of Jet Airways, we have seen in the case of many other companies. But at the same time, the newbies which are just coming on the clock, that they are creating more shareholder wealth than anybody else. So, and one thing which I absolutely like what you said, that as a mature investor, you don't get excited immediately. So I think that's a message to all the particularly that don't assume that whatever pitch you are sending it to the investors, and you may be thinking that you are changing the word, but he may have already seen 50 such ideas who have changed the word and failed it. So, so certainly try to be sensible. In the end of the session, I will certainly ask both of you what are the top 3 things the investor should do and how to build up the pitches. What actually excites you? You know, you said that okay, 10 investment you make it. What actually excited? Not just like creating a waste to wealth. And how do you pick up your investor date or a date with a startup? Coming to Ritesh. Ritesh has mentioned in the beginning about the bank of the future. Bank of the future is certainly we have seen, and when we were growing up, we have all stood in the lines where father has given a check to deposit or take out the money. Even to take out 100 rupees, you require a day. Now, many of us has not visited bank forever. some of us has even forget about how to, my kids don't even know that how to fill up the pay slip of the bank. And going forward, nobody will carry the plastic card, which the whole industry was built up. It's a thin plastic card, it's a white plastic card, it is having one logo here and one logo there. One company is selling a plastic card, which is not a plastic card, which is a metallic card. So all these things have changed dramatically. Now, what will be the bank of the future? So somebody who is growing up, a 15-year-old, and he have to see what will be the bank of the future in 2030, I would say 2050, and even further 50 years down the line. What will happen in the bank of the future?
See, it's very interesting and fascinating what we have seen, in, especially in last 30 years. All right. I recall when I was 10-year old and I've seen the banks, they were very different than what they are today. And now I'm part of building the banks. Now, I've been advising quite a few leading banks globally, especially the challenger banks. So I've been quite active into the challenger banks space, N26, Revolut, and Chime, and a few others. Now, what they took as a view that how I can solve the problem for the consumers, right? We have got the technology available. So how I can remove the friction for the consumers. Now, unfortunately or fortunately, the customer behavior has changed dramatically over the period of time. You and now the kids, the phone, this is a technology for us. The phone is a technology for us. For kids, it's not a technology. Like for a 10-year-old, 15-year-old, it's not a technology for them because they are born with it, right? So nowadays kids start writing later and they start swiping at the age of when they're a couple of months old, right? So it's not a technology for them. Now, what we really need to think that at the moment we are focusing on removing the friction from the user journeys, because GAFAs, the Google, Facebook, WhatsApp, whatever we are using, customers experience customer expecting the similar experience from the banking as well. Why banks would be any different? So that is the expectation from the customer. So what happened in the last 10 years that banks were focusing on the putting the digital lipstick on, providing the better user experiences, not really improvising and improving their underlying technology and the platforms or the model. And that's where the banks are today. Now, when the digital banks came into play, like the global challenger banks, they are completely digital bank. They are born in the cloud. They have got the latest tech stack. They're providing the services where you don't have to visit the bank. You don't have to do anything. Everything is available on your mobile phone. Now, the future that we are looking at. So I'm pretty sure we all know about we know the payments, the way it has changed from typical payments to the contactless and whatnot today, right? And the value stream in the payments has changed as well. And that is giving the birth to the new fintechs in the market. And India has seen a tremendous growth. Now, the future that I'm looking at, I'm not talking even 30 years or 50 years, for next 5 to 7 years, when I'm going for a walk in the morning, I see a house on the street, which is up for sale. And that house must have an advertisement with a QR code. I'll just pick up my phone, scan the QR code, and I would be able to see whether my bank can give me the loan or the mortgage for that particular house, whether it will do the affordability check straight away. Bank will give me instant notification about my credit worthiness. And if I accept that, my mortgage application should go straight away. And by the next day, I should be able to buy that house straight away. That's where I'm seeing the banks are moving in the next few years, right? In the 5 to 7 years, I'm not talking about even a decade. And that's halfway through, we are already there. Now, what is really changing in the banks at the moment? Banks are becoming a dumb pipe. So banks got to really think about that, how they will not become a dumb pipe. And that's why they need to focus on the ecosystem. They can't do everything by themselves. Now, what has happened in the past, it can't continue in the future because we have got the fintechs, we have got disruptors, these are disrupting the market. You can't really entice your customer just by the interfaces, right? So the banking is ingrained into our life. So banks has to think about how they can provide an overall financial well-being to a customer from morning coffee to the nightcap. How they can integrate themselves into your lifestyle. So yes, we talk about the super apps, whether banks has to become a super app. Probably yes. So we are looking into the marketplace. Ultimately, where we are heading is a marketplace. Banks has to become a marketplace where they would offer the services regardless of who is providing the services, so that customer have got the services available to them. And how it's happening in today's market, it's already happening. If you look into the banks, they have got into the bank insurance, they have got into the wealth assets, variety of other businesses, right? And that is what happening through the open banking platforms. Now, as I was talking to Vineet earlier about the banks have to wash up their dirty laundry in open space. What it really means that banks have to focus onto their underlying services, banking as a platform, banking as a service, and that is the future. So bank will become irrelevant. And over the period of time, this is again, we are talking only in the payments landscape. Now, if we get into the cryptocurrencies and the digital currencies over the period of time, where we are looking at the future, once we have got the central bank digital currencies in play, now we have to really think about the role of the banks. What is the role of the banks? You open an account, they take your money, they provide you the various services, and they are accountable to the central bank. If you can directly have access to the central banks, and the central banks directly rotate their money and the digital currencies into the market, what is the role of banks? So banks has got a serious problem over here. So the future of the bank, I wouldn't call it as a bank, I would call it as a future of the financial services, is around a marketplace, services available to the people. And what Vinita said rightly earlier, that everybody is focused around this 1 billion population, right? We talk about the financial services, transaction services and everything else, but we are keeping only this top layer into mind. We are not talking about the people which are after 1 billion. Let's look into China, what China has done with the village banking, right? Let's look into the other South Asian countries, what they are doing. So the bank of the future that I'm saying, ultimately, we will not have a dependency. We are not going to tie down with a financial institution. It is going to be a marketplace. And that's what I'm seeing in next 10 years. 50 years is a far away. And in the next 30 years, I would be seeing the full rotation of the digital currencies in the global landscape. And for me, the future is like when everybody will have access to the transaction bank account. And that's what I call it as a bank of the future.
Thank you. I still remember two quick stories I remember. One was 2005, I was in Mumbai, and there was a syndicate branch bank in our campus. I was working for SP Jain Institute. I went there, 10:30, the branch was open there. And the new computerization has happened at that time. There was a middle-aged lady who just came in as a teller. I have to, I don't know whether deposit a check or withdraw some money, whatever. And there was a huge crowd around her desk. People were banging, and she was absolutely mad. She was not able to, and she said, why they have given this computer? You know, it was working so good. Now they have given a computer, nothing works. This is absolutely useless. And she was struggling and pressing all the keys. Nothing was happening. I said, Madam, I know little of IT. Can I have little help? She said, no, go away. You know, Marathi mein chilla ke, go away. Nothing will happen. I said, you have to press on the on button from the switch. Then the computer switch on. Because Safai wala has switch off the button. It was not turning on. And since then, 15 years, of course, now people have stopped visiting the branch. Now, another story which is quite recent. My father-in-law has to take a loan, and of course, as a old economy person, 68, retired, he liked to visit bank because you can also speak to the people there, and not just like it's a social engagement. You go to a bank every 15 days, you meet people, you chat with them, you spend time, and you know. It's a good engagement way. So he has to apply loan in the branch. It will take you maybe few weeks because you have to go on approval. It will go to Mumbai. But if you apply it online, it will take you 10 seconds because your car loan is pre-approved. Sorry, I think there is some connection issue here. So if he has to apply the car loan using the online channel, it is a car, and then you can print out detail. It just takes 10 seconds. So then things have changed. Even the teller, which was struggling to use the computer at that time, a teller which was using struggling to use the computer to use the online system. Things have so much changed. So coming to Vineet, Vineet, same questions to you what I've asked Ritesh about the bank of the future. From the investor perspective, you sit on the other side of the table as a startup mentor, as well as the investor. And investors and both startup are absolutely, I would say, don't like the bank that much, because it's a majburi to set up a bank account to do your transaction, but they don't like banks, because bank does not give the money, bank charge the interest and whatnot. All those issues are there. So what do you see as a bank of the future for you, for as a startup as well as an investor?
I think, Nikhil, the banking is a very old industry and it has very deep roots. So disrupting that industry is not that easy, even though there are lots and lots of things. Remember, banks also have a regulatory arbitrage, and the regulator therefore is very aligned to protect the banks, and therefore gives a significant amount of leg up to the banks and the financial institutions, including non-banking finance companies. So disintermediation will happen because the banks have started thinking like a dinosaur, believing like a dinosaur, not necessarily, and the change of the age that is taking place. Some of the banks are not awakening to the change. Others have awakened but are slow to the change. Now, the bank of the future, which is what most banks want to be, has to be agile, nimble, and thinking about the customer. Somebody has left a question in the question answer. This thing is what is best for poor customer, or what is I think that when you actually, what business approach works best for poor customer? That's the question. Now, similarly, when you look for it, I think the most important thing for the banks have to understand is they are actually there to serve the customer. The customer is not rich and poor. It is the opportunity and the way you engage with the rich and poor that creates value. So microfinance people are very poor, but they have created a 3 lakh crore business. Now, not a single bank could see it, but Professor Yunus in Bangladesh could see it. So what is the power in what form? आप किस भेष में आपको भगवान मिल जाए आपको पता नहीं है. So आपको careful रहना पड़ता है. And the banks are not able to understand that. They are actually trying to imagine the customer in a certain form, and anybody who does not fit into that form, they are not able to actually identify, work, or assimilate with them. As you rightly said, the startups are actually the new corporates. And I was having a debate. I was in this commission where Paul Polman was the ex-CEO of Unilever, was my chair. And there was a huge debate. So I was the rounding off error on the balance sheet of everybody else in the room. And when the debate started, they said, hey, ultimately, if we are able to convince the big guys, the small guys will fall in line. And I told him, sir, for what time period? Because every 20 years, the hegemony of the top 20 changes. And the biggest top 20 companies 20 years back, actually, if you look at the current companies, they were really startups 20 years back. The Google, the Apple, they were all startups 20 years back. So 20 years down the line, who is going to be the big 20 in the world? We do not know right now. Most of them might be listening to this conference or this webinar. And I think as a banker, if you start thinking about this, that the world is changing, you will try to change and cope up with the realities. Now, again, remember that because money is a very complex business and money continues to actually bring in regulation, which Ritesh very articulately talked about, that is India ready for the regulatory challenges that it is going to face because of the number of startups which are coming, mushrooming up. I think regulation always follows development. It never leads development. Very rarely have regulation led development. And I think UPI, UID, etc. probably could be put in a regulation-led creation of the infrastructure, and then everybody else is actually like a. So they created the base for the garden, and then rest of the startups are actually flowering into those gardens. My personal belief is when large number of startups come in, they will create disruptions, and some of them would be ugly disruptions. And those ugly disruptions will force you to do self-regulation. Those startups will have to self-regulate themselves. And second, the regulator will follow in close heels and will put together regulations that will bring everything into a tight box. So bank of the future has to be A, aware of innovation, B, very conscious of its customer. Both these things are actually not known for current banks. And the third has to look at capital, the strength of the balance sheet as only a commodity strength. The strength of the balance sheet today defines your success, but going forward, strength of the balance sheet probably may not be the only factor defining your success. So being conscious of your customer and being aware of the disruptions that are taking place around you would probably be one critical. India is also probably going to consider digital banks very soon. And if that so happens, India's banking industry will be disrupted as it has never before.
Thank you. Quite aptly explained. My quick announcement to all the panelists, all the attendees is that please ask questions as on the chat box, as well as you can answer in the Q&A. If there is a specific panelist you want to ask to Vineet or Ritesh, you can take the name, or otherwise you can put a general questions to any of the panelists. A couple of questions have started coming in. I'll take some of these questions. The first question is first and second question, both are generic questions which are coming in the chat box. Other than the market, what other factors influence financial industry? First, I will go with Vineet because he will bring in the investor and the startup perspective, and Ritesh can bring in the international as well as the banking perspective. So other than the market, what factor influence the financial industry? Quite interesting.
So I think it totally depends on what the individual means by the market, because if they mean by the stock exchange, then that's not market actually, frankly. That's for a very small piece of the world that is market. The market is people, even your customers, they are the market. And so financial industry or otherwise everywhere in the world. So there are many, many factors actually. I mean, I don't know how many of you actually understand financial industry, but financial industry is a game of leverage. What amount of equity capital do you have and what amount of capital you have leveraged? So banks actually work on leverage. Non-banking financial companies work on leverage. Fintechs are essentially, because they don't have a balance sheet, they use FLDG or first loss defaults to create leverage. And initially, when the FLDGs were low, the NBFCs can actually leverage themselves to 3, 4, 5, 5.5 times. Banks could leverage themselves to 7, 8, 9 times. Initially, fintechs were able to leverage themselves 5 to 10 times starting up. Because if you offer only 10% FLDG, you will become 10x leverage. And therefore, you had the propensity to create a significant amount of returns. Unfortunately, that leverage has gone. Most of these fintechs were doing, so the fintechs again have multiple areas of intervention. You actually come from, are you trying to strengthen the credit part, which means there is a non-leverage, non-linear growth is possible if the credit function or credit underwriting in a non-banking finance company or a banking company does not increase with the size of the portfolio. The second place where fintechs have played a role is granularity of the portfolio. Can you actually go and bring in customers that the bank is not interested in? And that's where fintechs have played a role. And there is a question saying can fintechs reduce the cost of borrowing? Actually, no, they increase the cost of borrowing because they are the third layer of lenders. So you have now the bank's cost, probably an NBFC's cost, and then the fintech's cost all rolled into one. And the reason they actually charge higher costs is because you, as a small and micro entrepreneur, is actually outside the financial ecosystem. And these guys are trying to pull you back into the financial ecosystem. So a long winding answer to a very simple question. Financial industry really plays on leverage, and credit cost and the OPEX cost. Those are the other three things. So if you actually are playing very well on leverage, but you start having a very bad portfolio, then it doesn't matter how much leverage, the more leverage you are, the higher the chances you will go bust. And so 3 things that you look at: leverage, you look at credit cost, and you look at operating expense ratio. Other than what you thought you were asking, customers, sabka pitaji hota hai, so you have to always customer. Other than these are the 3 factors you look at.
And certainly one of the advice I want to give it to the startups and what we have seen, particularly the tech startup, because of the startups we have seen in IIT, many of them get away by saying that I don't know anything about finance, but that's not the case. You have to get to know about the finance, whatever it is. There is no way, if you're doing a business, if you're an entrepreneur, you need to know. So maybe it's time to learn a little bit about finance.
If you are an entrepreneur, the buck stops at you.
Yeah.
So if I am a banking entrepreneur and I say I don't really know about technology, it is equally bad for the tech entrepreneur to say I do not know anything about finance. So I'm a forester. I neither know technology nor finance, but I can speak on both, because without learning about these 2 things, I wouldn't have survived.
Absolutely. I absolutely 100% agree with you. And this is a mistake a lot of investors, a lot of startups do, because they don't understand the concept of cost. They don't understand the concept of leverage and other things that you have mentioned. It's absolutely important for all the startups to learn these terminologies, practice it, create a budget plan, create an investment plan, create a cash flow plan. Otherwise, the same way that you see the success, the same way you go belly up quite quickly in the startup domain. It's very, very challenging and becoming more competitive day by day. Coming back to Ritesh, I'll give you another question, Ritesh, not just about the factor influence of financial industry, because there are more questions coming in. So one more question has come. What are the thoughts on business approaches that work best with very poor customer? And you sitting in London, which is one of the richest places in the world. So how do you see poor customer and how do you give benefit to them?
Hey, Nikhil, I would like to differ on that slightly. The London is the rich customers. No, not really. Because yes, the economy as well as the system provided by the government, the systematic structure is such which supports the people, which supports the poor people, right? The customer is not really rich. If you look into the average income over here versus the expenses and the debt, the customer is in debt, right? So unfortunately, that is the lifestyle that people live. Now, coming back to the question, how we address the problem for poor customer, it becomes a bit easier over here because of the systematic support by the government, by the regulators, and by the support or by the various schemes by the government as well. Now, as a financial institution or as a startup, like I can tell you about my example, why I have got into the startup landscape or starting another fintech, because I've seen a problem with the customer and a specific problem where the banks are not going to solve the problem. Because last year itself, if I'll just give an example over here, 70 billion outstanding credit card debt, right? And the market is highly concentrated. 5 players owns the 92% of the credit card market in UK, which is the second largest credit card market in the world, right? Yes, it is nowhere close to US, but it is the second largest market. And the market is highly concentrated. 5 players owns the market. Now, how I can provide the value to the consumers, how I can reduce the friction, or empower my customer so that they get the fair value, they get the fair product. As I said, it's a matter of laugh when I talk in any global forum that the payday loans range from 300% to 1500% APR. And that's a joke. It means you are putting people in, first you push people into the debt cycle and you squeeze them out so that they can never come out of the debt cycle. And that's where the systematic problem in the Western world. Now, how do we address that? Is first segregating these customers as well. Like I'm pretty sure everybody is aware of the subprime market issues that has happened in US market, right? Now the subprime is a major challenge into the Western world. So to understand their problem, and you can't just provide them one solution. You have to address one problem at a time, but you have to look into their overall journey, right? From the income to the expenses to how you're going to add value into their day-to-day life. Because unfortunately, the poor people pay the poverty premium. Because once you're poor, it means you don't have access to the similar level of financial products which one with a good credit worthiness will have available, right? So that's where the challenge is. So how you're going to address that problem? So look into certain examples in Africa or Brazil that have been associated with quite a few initiatives where we have addressed the problem of the poverty premium by providing a subsidized utility, by providing the subsidized credit based on the credit worthiness of a person. Now, how you associate the credit worthiness? Unfortunately, we live in an environment, it's a universal business banking environment. And coming from the banks, you look into it from the credit risk perspective. But hey, you can look into the credit risk of a person from their social status as well. So you can provide them the credit at a lower APR. So how you address the problem of a poor is basically understanding the people, understanding their classes, understanding their income expenses, and try and fix the problem in every aspect and join them together. You might, as a startup, you might be looking to fix a one problem, but you start understanding that how you can fix that problem, which can help them with the other products and services as well.
I think quite a valid point made here that understanding a customer is quite critical. And a couple of points which has come in, and there's a question related to it, that the fintech is now becoming a bank. And we have seen some of these new, though it is happening here only in the payment stage, Paytm started as in sort of a replacement of ATM. So it was a Paytm. Now Paytm is becoming a bank. Airtel, which is primarily a voice provider, the whole idea of telecommunication was I can call you. Then the concept stopped, and I know in UK it stopped from calling each other to texting each other. Then sending a video message or something, or WhatsApp messages. Now even not texting, WhatsApping each other. So things have changed. Telecommunication has evolved. Like Airtel or M-Pesa examples in Kenya, it is moving away from providing a voice service, the whole concept of the telecommunication of voice, and now moving towards becoming a bank. Over and over a period, see that this merging of core businesses is happening. Another such example I would give from the phone industry. The concept of phone, as I have said, was to call. Today, if you come to the India and see any of the newspaper articles or newspaper advertisement, the phone is advertised not by the clarity of the voice, but the pictures it clicks as a selfie. Some of the biggest phone companies are advertising that my phone can click this clear selfie. It has 14 megapixel and 20 megapixel. So why you need a phone? You need a phone to click your own picture and put it on a Facebook, or you need a phone to call somebody or to communicate with somebody. So that blurriness is increasing between the different and businesses. So certainly this question is quite apt, which I want to put to both of you. Do you consider fintech and banks as a competition or a merger? I would add one more point here, or as a collaboration opportunity for the future.
See, Nikhil, I always say this. I do visit London Business School quite often, and I always say this to the people that you have to consider everything as a threat and opportunity situation, right? It is neither a threat nor an opportunity. You have to combine them. You have to see it as a threat and opportunity situation. And a very valid point, and that's what we hear. I'm pretty sure Vineet would be laughing and agree to this as well, that all the time, that whether it's a competition or collaboration, one can't survive without other. Let's be realistic. Whether it's a fintech or a bank, banks have got a centuries old history. Fintechs are newborn. They are agile, safe, and simple. Banks have got balance sheets and the customer. Both of them have got their own challenges. One has got a challenges with their OPEX, and one is the legacy platform services. The other has got a challenge with their cost of their capital and the cost of customer acquisition, which is the biggest challenge, right? Because any fintech to grow, what is happening in the fintech landscape? Let's talk about the Revolut, 35 billion valuation in no time, in last 5-6 years. What happened? What is the balance sheet of a company? What is the balance sheet of a bank? Next to nothing. That is not a profitable business, but the valuation is a separate story. So banks, individual fintechs, they can't survive without banks, at least as of today. In the future, what we are going to see now, we are seeing a collaboration and the partnership ecosystem, and that is what growing up. And that's what I said earlier, that the banks are becoming a dumb pipe. Now they started realizing that they can't survive without the partnership ecosystem, and they started partnering with the fintechs. Revolut is not a bank. One of the highest valued fintech, but it isn't a bank in UK. It's a fintech. They haven't got a banking license. Chime is a bank. Whether it's worth 25 billion, that's a question, right? So now ultimately they can't survive and they have to collaborate. It's a partnership ecosystem. We have already started seeing the mergers and acquisition in this landscape, and we are going to see a further mergers and acquisition in near future.
So I think absolutely I agree what the Ritesh has said is a collaboration and competition. Both has to survive with each other. Today's competitor can be a collaborator tomorrow. Today's collaborator can be a competitor tomorrow in an absolutely dynamic situation. Now, two questions to Vineet, which are complementary to each other. Sher Singh has asked, being a startup, what tools we should learn to grow with the market? And the similar question has been asked by another anonymous attendee. What sort of license should a young entrepreneur aim to get to start a company in FinTech?
So I think, see, this is really basic ABC level stuff. So let me actually try to tell you that it doesn't matter if you want to be in FinTech, first actually think about the problem. The legal part of it is really minor. So if you want to be a FinTech, you can just simply be a company. If you want to be a FinTech with a balance sheet, then you have to become a non-banking finance company, which is a very different regulation and governance. If you want to be a FinTech with access to very cheap capital, then you have to become a bank, which has very different connotations and process and regulation. So in an ideal world, if you are a startup guy, then you most likely are going to be a FinTech without a license, which means you will essentially set up a company. And that's really what you have to do. You have to get a license to become a company, which takes 1 lakh rupee and you can set it up. What was the second question? The second question was
outside of license, yeah. What tools you should learn to grow with the market?
Yeah, see again, it's a journey, guys. So first and foremost, what you have to do is ask yourself, why are you trying to be an entrepreneur? I'm not discouraging anybody, but let me tell you, entrepreneurship is a tough business. It will actually mature you, to teach you a lot, but entrepreneurship is not for everyone. So you have to first ask yourself, are you an entrepreneur or are you really a person who is looking for independence to do what you want, but within a defined framework? There are lots of people who do not understand the definition of entrepreneurship, but entrepreneurship is really first understand your limitations and then excel within those limitations. These are the two terms. If you understand these two terms, you will become an entrepreneur. Now, if you think money should come to me, somebody should give me idea, everything should happen on its own, then you are not an entrepreneur, unfortunately. Then you are actually a spoiled kid. As an entrepreneur, you will be fighting the regulator, you will be fighting income tax, you will be fighting governance, you will be fighting investors, and you will have a challenge on everybody else, every other side. And if you do not have the mindset to move forward, then you will soon get a very frustrated person. And it's very, very critical, therefore, to first understand what entrepreneurship means. The second is, do I have the right tools? Well, it's humanly not possible for you to have all the right tools. So what you should have is the right attitude. The tools are actually very low-end stuff that you can buy, hire, and is available off the shelf. What you must have is the right attitude. And I think all this is the softer aspect of entrepreneurship. The harder aspect of entrepreneurship, India has now When I started, there was no incubator in India. Neither IIT Kanpur nor IIM Ahmedabad existed. When I was setting up my first incubator, nobody actually knew the definition of an incubator also, other than the baby incubator, the human baby incubator. Today, there is an incubator at you throw a stone and then it will fall into an incubator most likely. So the hard skills will come from the incubators. People will tell you what to do, how to do. It's actually quite easy. Having said that, most entrepreneurs normally, because they make very small mistakes, walk into really dangerous, what you call regulatory traps. For example, you mentioned about getting money from foreign countries into India. There are some very simple things you need to do. You first need to actually get a certificate from the bank that you have received this money, foreign inward remittance certificate. And so that when you return that money, at that point of time, that certificate has to be produced. 99.9% people don't know about it. You are into a regulatory default that is going to bite you when you become $1 trillion or $1 billion company. And then if you go and find out what happened to the FIRC, which was supposed to be filed 10 years back, you are going to be in real trouble. And I'm telling you because I was in that trouble. 8 years back, I actually was searching for that FIRC certificate, which unfortunately is a relationship between bank and RBI, and we don't, as entrepreneurs, don't even know that it existed. But we learned the hard way. So generally, get the right attitude. Bring a right team. If you are an entrepreneur, please attract the right team. So find a chartered accountant, young chartered accountant, tell him to join you. Go and find a company secretary who can actually provide you a very cheap service. Company secretarial services are not expensive, but you have to learn to do the right things. Try to build a board or an advisory board so that they can actually guide you with their experience. Try to bring in people who have done business. Dhanda is very important. You are getting into a business. This is not an academic game. So please understand, you are open to the vagaries of nature. You are standing there with rain, wind, heat, everything going to hit you. Just get used to it. And therefore, attitude is the right thing. Do not get bogged down by what happens to you. Keep moving forward. That's the only thing entrepreneurship tells you. Whatever people do to you, keep moving forward. And you'll be surprised. Success do not come because you had the best idea. Success came because when your time came, you were standing there as an entrepreneur. There will be money which will come and knock at your door. Unfortunately, most entrepreneurs give back just before that money comes in. So wait for your time.
Thanks a lot. I think excellent advice by Vineet for all the entrepreneurs. Now we are running out of the time, so it is just 10 minutes left. Couple of questions, I can take it maybe. One question specifically come to Ritesh, which is about what is your thoughts on new umbrella entity? What innovative product you foresee from NUE is different from NPCI?
Sure, it's very interesting because India is definitely Modi government or overall India is pushing for the digital payments, right? And India being such a large economy, it's quite difficult, and it has been foreseen as NPCI will not be able to manage it by themselves over the period of time. And that's where the focus is on building up these new entities. And these new entities are basically Amazon and a lot of other banks are applying for these becoming a new entity. The reason is it's in favor for them. When I say favor, it works for them because they're already into the businesses. They can build the new products and the services. The kind of products that we are looking into, we are already seeing India has got a tremendous line of products when it comes down to the payments, right? And leading the way globally. But at the same time, we are going to see the growth into the buy now, pay later sort of landscape. We are going to see the growth into the credit landscape quite significantly, especially into the MSME sectors. And we are going to see a growth in the interoperable infrastructure that is there at the national level, but it has got to improve with the growth in the digital payments in India. And that's where we are seeing the opportunities with the new entities. And that's why the existence of the new entity, because RBI has realized with NPCI, it is like monopoly at the moment. NPCI drives that. But at the same time, how they can disrupt themselves. And if you would like to create innovative product, you got to disrupt yourself. And that's where the focus is, building these new entities as well, and building that competitive environment within the market to bring out the innovative products.
Okay. So thanks, Ritesh. I think one last bit I would like to ask both of you, certainly no advice to entrepreneurs, because I'm sure in your 1000 webinars that you have done last 1 year, everybody must have asked the same question. What is your last advice to entrepreneurs? So I would like to ask this question of a different kind of advice. Baniya is a connotation which is associated as a caste, and I'm a fortunate Baniya that way. But Baniya is in common today's term is somebody, or probably in earlier, when the whole casteism started, it was somebody who understand the concept of money. How to become a good Baniya in today's digital scenario?
See, what Vineet has also said earlier, and I would completely agree. I have said this umpteen times in past. Payments is a political business, right? Now, when I say payments, let's not term it as a payment. Money is a very interesting business, and money is something which is closer to everybody's heart. Right? Now, first you need to understand. I always define this as a success is the byproduct of the person you become. Right. So being an entrepreneur, if you want to become an entrepreneur, you need to be a baniya. Simple. You need to understand that how money flows, right? No matter how much money you have, if you can't have control on your expenses, then you're out there into the market. And that's what happens with most of the people. So you need to understand the unit economics very well. And these are very fundamental. I'm not trying to give you advice from the entrepreneurship perspective, but understand the basics of the money. It is you who is going to define yourself as an entrepreneur, right? So the person you become, that will define your success. Now, how you do that is understand the basics of a business. It's not only about having a great idea or a great product, but how you can take that to the masses, how that will convert into money over the period of time. How you, and being a frugal entrepreneur as well. It's not only about like, I'm going to get the money. I can give you umpteen examples. I was having a conversation with the people yesterday. A great company grew up in last 7 months, 80 CR of business, no investment from outside, 3 people company. Only 3 people, and they have done a business of 80 CR. And it's in MSME sector. A great business that they are building up. Tomorrow, if they are going to sit in front of an investor and asking for a couple of million, nobody is going to deny that, because they can see the potential of the people. So basically, you got to understand the fundamental. It's not only about having a great idea, but it's basically about who you are as a person as well, whether you have got a caliber to lead that.
Nikhil, I think since you talked about caste, I think if you have to become a successful entrepreneur and do very well for yourself, then all the 4 castes actually play into your role. If you can't roll up your sleeves and do things yourself, you will never succeed. You have to have that ability to act with your hands like a Shudra. You should be able to do things with your hand. If you can't, and you have to start from there. So if you're not a good Shudra, you will not be actually become a good entrepreneur. Then of course you need to know how to manage money. So you have to be a baniya. There is no doubt about it. But you must have the courage to stand up when things go wrong. And in a COVID world, in a post-COVID world, people need to remember things will go wrong all the time. So you have to have the Kshatriya's courage. You have to have the bravery to actually stand up to deal with the adversities, and they will come, and they will come in torrents. And finally, you must have the Brahminical ability to think and have self-reflect and self-realize. If you don't have all these 4 things, all the 4 things in equal quantity, you're not going to succeed. And therefore, as an entrepreneur, the expectations are to be a perfect human being, having all the 4 qualities. And it is going to be incredibly challenging. Therefore, it is challenging, and very few people become very successful. Anybody can become an entrepreneur. So all the 4 varieties can become entrepreneurs. But success requires all the 4 in equal measure for you to deliver results. That's how I see it. Caste is not the greatest thing, and I'm not a great believer in caste. But at the same time, since we raised it, I'm trying to bring the philosophical angle of caste.
Absolutely. I think understanding in that perspective is important. Certainly, like as it is said that in mythology, Krishna was having all Chhattisgarh. No other man or woman ever had the Chhattisgarh. I think today entrepreneurs need those Chhattisgarh, what you have said. Absolutely right. Phenomenal. I think the debate, what we have seen today, personally, I have learned a lot. The two great pillars of fintech industry, investment, both sitting in the heart of the financial capital, one in Mumbai, one in London, and we are sitting in Kanpur. So imagine that how that technology is able to bring everybody together. So thanks a lot. I would now give it for the formal remarks.
Thank you so much, Dr. Nikhil. Thank you for moderating the session so wonderfully. It was such an insightful and interacting session. I'm happy and a privilege to be a part of this session. And I thank our two eminent speakers, panelists, Mr. Vinitra and Dr. Ritesh, for their time and making this successful session. And even I learned a lot with this. The definition of entrepreneur, to understand your limitation and then work accordingly, to have all the four qualities of the different categories in our society. And then that makes a complete entrepreneur. So I'm wishing that all the attendees, all the entrepreneurs who joined today got a wonderful message from here, and they will be following the suggestions that you have provided to them. Thank you so much for your time.
Thank you, Anamika.
Thank you.
I'm very grateful that you followed through with me and didn't give up. Thank you so much.
So
Thank you, Nikhil.
persistence is one of the quality. I think that's a fifth caste, persistent persistency.
Yeah. Thank you so much.
Namaskar, everyone. Thank you.
Thank you.
Thank you. Thank you.